What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video we're talking all about gold, the moves in gold, where we think it's going, and some interesting stocks to watch. So I wanted to give you guys a full update and my opinion on the precious metal markets, as it has been kind of a drag. We've been struggling a little bit recently and I wanted to update you guys, give you my thoughts, along with bring some news. These are your market minutes, so we do have some exciting news on the way as well. And last but not least, guys, I wanted to thank you for supporting the channel. It means the world to me. And thank you for supporting our new channel, Departure Stock. So we'll talk about that in just 2 seconds. But let's get straight into the video. First thing I gotta ask you guys though is, if you do support me, the channel and all the videos, to kindly explode the like button. It takes just 1 second of your time, and I've noticed way more views over the past couple days. Maybe it's because I've been doing, better topics, talking about some trades that I've been making. But either way, thank you for the views, the likes, and all of the comments. That brings us to our next point. Drop those comments below. Let me know if you made any trades this week. So far, things are panning out pretty well. Else Nutrition is pulling back a little bit today. As you guys know, we sold that yesterday. Bought a few other stocks. We'll be talking about those stocks today as well. Got a few updates on Fosterville and all that good stuff. And then last but not least, if you do like constant updates in the markets, you want to follow along, learn a little bit more about gold, silver, and all the other sectors that we talk about, then of course don't forget to catch that subscribe button and ring the market bell for notifications. And let's get straight into this video. So the first thing I wanted to say was, we dropped a second video. This is the second video on uranium for Departure Stocks. We're almost at 500 subscribers, guys. So head on over to our brand new channel, smash the subscribe button, and let's get this channel to 500 subscribers. My longer term, or now kind of medium term goal, is 1,000 subscribers. So let's try and get Departure Stocks to 1,000 subscribers. So far, we've dropped quite a lot of videos on the channel. I've been doing one a day, so now we've got 25 videos up there for you guys to check out. We're talking about a whole bunch of different topics though, and that's what I like about Departure Stocks. Uranium, copper. I will be talking about a few other topics, and all the other good stuff that we love to talk about here at Departures Capital, or the Departures brand. Now, I wanted to announce some exciting news. We're going to be interviewing Peter Grandage today. Take a look at him, see who he is. He's a very big uranium and gold bull, and I will incorporate that into tomorrow's videos. So last thing I wanted to say before we get into comment of the day and then all the information that you guys tuned in for was, we did post 2 new trades in our full access insider group, along with a new document, our company analyzer document. It goes over a few new metrics in this document that I put together for all of my full access insider members on what I use to value a company and analyze the stock. So if you want to further support Departures Capital or get access to all of our exclusive content, $10 a month or $100 per year, that's our full access insider group on Teachable. Links also in the description. And we make 1 private weekly video per week. You see our full public portfolio, all the trades we make, and access to our awesome Facebook community. So guys, without further ado, let's get into comment of the day. And yesterday's video, like I said, did very well. We're finally getting a couple thousand views per video. We hit a lull there for a while, but I think it was because I was talking over and over and over about gold and silver. We love gold and silver here, but I guess we do have to switch it up. You guys can get bored. So the first thing I wanted to highlight was the first comment from Teresa Mitchell, and I'm not 100% sure on this either, but this was really great information that she brought to my attention. I'm just throwing this out. I'm not entirely sure. I think to qualify for the spin code, the settlement date may have to be observed. Settlement on US and Canadian exchanges is trade plus 2. Therefore, Fosterville will have to be purchased by Wednesday to settle by Friday. I don't think PM prices will increase over the next few days. Option expiration is next week, and the banks will do everything they can to smash the price down. And that's how it feels like right now with all of this optimism in the markets. It's really a weird place, but we're going to be talking about where I think the money's going, but what could potentially happen and reverse that may be positive for gold. So stay tuned for my opinion, guys, if you value that. Now, second comment of the day, same here, sold all my else shares today at 350 because I thought the run we had was pretty good and was happy enough to secure those profits. Definitely believe it will do well in the future and can keep running, but it was more of a swing trade for me, and I was in the same boat. I still do hold some else in a different account, but for the one account that I was talking about specifically, it was definitely a swing trade, and they did very well this month. Gold price prediction, and this was an awesome comment from Forrest Griffin. Thank you for the comment. I was very conservative. 1 to 5 years, 2,500. No, too low. It's gonna fly IMO. JP Rowe, some of the technical analysts I follow show the uptrend continuing into early 2023, then a correction and a resumption of the trend until late 2027. Still early, looks like. Range bound to $23 to $25 for the next 5 years. He was talking about silver. Okay, so TRP, oops, that was silver. You asked about gold. Pull back slowly for the next 5 years to bottom out at 1500. I can't see that in this uncertain world. We are living in sensitive times and will be from now until the close of time going to the moon. Why would it be any different than 2011 to 2018? Shoot, pull back hard, slowly drop for the next 5 years. So anyways, guys, everybody has their own opinion. I'm, of course, a gold bull. Even at 1500, gold exploration companies wouldn't do too bad, but we would see substantial declines in the share prices of some if not all of the gold companies, just because they're making so much money right now. Of course, if an explorer still hits a big deposit, they're going to make money, but I really do hope that we get a second leg up for gold. And I think that that's going to be probably, we're going to see those gains as we move into the winter, as we move into 2021. I think right now we need to be patient. But once again, that's just my opinion. This is not financial advice. So let's take a look and first see what's going on in the markets. Then we'll talk about some of our favorite stocks and give my opinion on gold and where I think it's going and what I think is happening right now. So the Dow retreats as Boeing cuts gains. Cases surge, so the Dow paired gains Wednesday as Boeing retreated from session highs following an early day surge, while rising cases continue to threaten economic outlook. Federal Aviation ordered the ungrounding of the 737 MAX, which was involved in, as we know, 2 very deadly crashes. Boeing was marginally higher after surging more than 6%. We are getting a massive rally for Tesla again. And I'm sorry, guys, congratulations to all my Tesla shareholders, all the Tesla bulls. But I think that this EV market, I'm going to call it a bubble, sorry, is getting a little bit out of hand. There's just so much money flowing around in the markets and people don't know where to put it. So why not put it into a few companies that only go up? I wonder if that will be the case forever. So let's take a look and see what's going on with gold today. So gold is down substantially. It's down $13.85 per ounce. Now, one thing that I thought was very strange today was the fact that the US dollar is down. So the US dollar is down 0.11%, which is a pretty decent move. The dollar is looking very, very bearish. And if we don't hold on to this 92 level of support, in my opinion, we're going to sink much further. So that's one positive for gold. The dollar is looking pretty bearish, but so far investors are going full risk on, buying up all of these high-flying tech stocks with pretty high valuations. Now, the tech sector is in a pretty good position, but I think the valuations have gotten a little bit out of hand. So I'm going to stick to my guns, and I'm going to stick to, the stocks that I love, which are the gold and silver stocks. I think that there's a lot of value in this sector right now. There's quite a pullback going on right now. We got that fake breakout when it came to gold not that long ago, and it's been a tough time. So some key levels that I think that we need to watch right now, we'll talk about that in just 2 seconds, but there is an ascending trend line. But anyways, guys, when it comes down to the gold technicals, there's a lot of talk about the 200-day moving average. So 200-day moving average, right now it sits at around 1790, just below 1800. So there is talk that gold could potentially pull back to 1800 one more time. That would be the final leg down, one could say. So we can't rule that out. And as investors, we need to continue to be cautious and think about, the potential downside, because gold has clearly leveled out here. Now, I'm still very bullish when it comes to gold. It looks like we could run into some decent support around 1850, but we need to be prepared for that not to hold. If that doesn't hold, however, I think that 1800 would probably be a really nice level of support right around the 200-day moving average. But we're going to get into a couple quick articles right now talking all about the technicals when it comes to gold. So the way it looks, gold is a short-term sell with a medium to longer-term buy in my books. But I will just continue to hold. I'm not going to try and trade the market at this point, especially when we're already almost at the end of this pullback. Quickly taking a look at a couple of our favorite companies. We are seeing Fosterville South decline another 7.76%. The stock was down, I believe it was over 10% today. And if that settlement date prediction is the case, then today might be the last day to own shares. Don't quote me on this. This is just a thought running through my mind thanks to Teresa Mitchell. So that is just something that I wanted to point out for you guys. Let me know what you think in the comments. And the last stock that we're going to talk about before we get into all the technicals for gold is MindMed. MindMed's having another fantastic day, hitting fresh 52-week highs on the day. And I really hope that we can, in fact, continue to run. We can achieve that NASDAQ uplisting. It would be fantastic for this company, and I think that the stock would go up a lot more than where we're at today. So fingers crossed, good things for MindMed. MindMed is a big winner today in a down market, and I think that really speaks volumes for this stock and for the sector. So let's take a look at all the gold news. This is what you guys waited for, and I'll talk more about my opinion on gold and how I'm positioning myself just a little bit later on. So this vaccine news could weigh on gold prices amidst shifting interest rate expectations. ABN AMRO. So the gold market will remain sensitive to further vaccine news, but this doesn't mean that the rally is over just yet. So I just wanted to read the bottom what they had to say, and I think this is a really good opinion. So while there is risk that shifting interest expectations could create some selling pressure for gold, Boel said there is still strong support from investors who see gold as a safe haven and an inflation hedge. And it's hard to say that we don't think that there's going to be inflation. I think there's going to be a lot of inflation. So there are still scenarios where gold price can push back above 2,000. This is from Franklin Templeton. The gold market continues to struggle below 1,900 an ounce as investor sentiment is weighed down by further news of potential vaccines for this global illness. However, one fund manager doesn't think this will keep gold prices down for very long. In a recent telephone interview with Kitco News, Steve Land, Vice President and Portfolio Manager for Franklin Templeton's Franklin Gold and Precious Metals Fund, said that although the vaccine's good for economic growth, governments and central banks still have to deal with the economic devastation that this global illness has already created. We now see a path forward, but there are still a lot of questions unanswered, he said. There's still a lot of work to be done, and that probably is going to require a lot of stimulus as we look forward. There's certainly potential for inflation. There's potential for currency devaluation that will be positive for gold. So I think that right now, even though the markets are going risk on, there's a big rotation going into value stocks and all of those beat up stocks right now. I think that eventually we're going to see that shift. Not to mention, we'll have to talk about Bitcoin in just 2 seconds, but I do have a few more things. So just a little bit of commentary and then one technical opinion on gold. So the marketplace is presently grappling with a specter of vaccines coming to the public in the coming months that will likely give economies a strong boost, while at the same time realizing it's going to be a grim winter as this global illness continues to rage in many areas around the globe, including the US and parts of Europe. On this day so far, it appears that traders are focused on the promising news. So one commodity analyst, fund manager, he's saying that commodity valuations right now are at 100-year lows. So when you can enter a market as an investor at the 100-year low valuation, you're buying near the bottom. Middle Group said, we've seen a strong rise for gold. Gold often moves sooner in a recovery than the broader commodity market, so I expect the broader commodity market to recover in the next few years. They will benefit from all the money being printed. I think the new administration in the White House will start to invest a lot in infrastructure. And then this was one interesting point he made about gold miners and discoveries. So to our surprise, the major gold discoveries in the last few years, they are all being done in Australia. Canada's lagging, and I think that's also because we have a severe correction, especially in North America, and there was very little money invested into the exploration space. There's a lot more money going into the exploration space now, so I expect many more discoveries in the next 12 to 24 months. So here we continue to talk about gold discovery and gold exploration, and that's something, I think the exploration stage sector is very exciting, potential for growth, and it's exciting to watch these projects unfold as they continue to drill. I've put a lot more emphasis on exploration as opposed to producers. So this guy was a real estate investor in the 1990s. You can feel free to tune into Kitco, but I just want to read a few more things. But he has since diversified into precious metals. He said that many real estate investors have started seeing the potential of gold to diversify away risk. Real estate is a great investment 95% of the time, But do you want to own real estate in New York City right now? You want to own real estate in Philadelphia right now? You want to own rental properties here in Amsterdam with tourists, with no tourists? No. So that's why we see many real estate investors turn to precious metals now, because they understood that you had a period of 40 years with ever declining interest rates, and you had the value of real estate go up for 30 to 40 years, and now it's getting a bit more risky. On consolidation in the mining industry, Middle Coop said that balance sheets of the senior miners are strong. Available free cash flow means more mergers and acquisitions will likely come in the next year, and I totally agree with that. There's going to be a lot of mergers and acquisitions. The big boys, Barrick, Newmont, all those guys are making tons of cash, Kirkland Lake, and there will be tons more acquisitions. So guys, I just wanted to highlight this one last tweet by Peter Grandush. Like I said, we will be interviewing him later today. I saw a video of him on Kitco. I made a video on uranium. He retweeted me. We connected. It was quite amazing. So that's what I love about YouTube and social media. You can connect with people, and everyone's at home, or a lot of people are at home right now. So why not do some interviews and talk about some exciting topics? We're going to be talking about gold, silver, and uranium, of course, and any other investments that he likes. But let's read this tweet. So there's a possibility that 1850 won't hold, and a test of the 200-day moving average would follow. Given the likely coming 30,000 Dow party and a risk on mania never can die. Chant from Robinhood Crowd, the last part of this gold correction is setting up. So let's see if this is a possibility. And here we have the 200-day moving average at 1793. So we'll see if we get that, guys. I hope we hold on to 1850. We could still hold on to 1850, but we got to be prepared for more downside. We can't be oblivious to what's going on in the markets. And it's quite crazy. Like, we are seeing a massive run for Bitcoin. Bitcoin's at 17,500 now. We'll see how long that lasts, but if we start to see some profits being taken in Bitcoin, we could see a little bit more support for gold. But right now, gold is at 1869. It's down $15 per ounce, and we will be monitoring that over the next little while as it trends closer to 1850. So more buying opportunities could be on the way. So let's take a look and see what's going on for the green sector. Kronos Beverages, Mine Med, and Afria, three biggest gainers on the day. Big thumbs up to Afria. They made that acquisition, and the company is looking strong. Ignite, Alkaline Water Company, and FSD Pharma, three biggest gainers. Three biggest losers on the day, sorry guys. In terms of the dividend sector, we are continuing to see these value stocks gain. The banks have been gaining too. Savaria, TD, and National Bank of Canada, three biggest gainers. Enbridge, XLU, and Brookfield Renewables, three biggest losers. Brookfield Property Partners, I wanted to mention and shout out there. They are doing fantastic. They hit over $22 per share, and I love to see it. I love those value sectors continuing to run. Let's take a look at the broader 2020 watch list. In terms of our stocks, Tesla, Air Canada, and Beyond Meat, three biggest gainers. Else Nutrition declining 10.2% today as the sell-off continues. Charlotte's Web and JNUG, three biggest losers on the day. Now, in terms of our gold and silver stocks, let's take a look and see. And it is a heavy red day. No stocks in the green except for African Gold Group. But Fosterville South, Silvercrest, and Silver Elephant, three biggest losers, down 8%, guys. So that's it for the video. That's my opinion on gold for the short term. I am neutral to partially bearish, but I will continue to hold. I don't plan on selling any of my gold stocks. And I'm just using this as an opportunity to nibble away and potentially accumulate in hopes of a better 2021 for gold as the market is pulling back. But I do feel like there will be more bad news to come. I don't mean to be super bearish, but I don't think that this euphoria is going to last forever. Now, don't get me wrong. I could be completely wrong. I will continue to hold all of my gold stocks and probably will be adding to those positions. So guys, anyways, always remember Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decision for yourself. This video is not financial advice. We'll see you guys in our next video.